right, hi, I'm Monica Urban. I'm here with Jenny Lynn with First United Bank. And we're here gonna talk about, the industry. So Jenny, tell me about the insurance, I'm sorry, tell me about the interest rates or anything you feel like sharing with me as a mortgage lender.
Wonderful. Yes, thank you. So right now we're seeing, especially in the Austin area, a lot more buyers getting ready to make offers and find their homes. A lot of people have been waiting, hoping to see those rates come down, and we are now seeing that happen. So there's more activity, more pre-approvals happening. At the same time, we have one of the highest inventories, so that's homes available for sale on the market
Yes.
than we've had in almost a decade in our area. And so what that means is buyers have options, so sellers are having to be even more strategic about how they list the home, what they want to list it for, what kind of work they're willing to do ahead of time, pricing appropriately, and needing great agents to help them do that. Because there is so much more competition between sellers of getting the attention of those buyers. We expect a Fed meeting to happen on the 18th that will likely result in lower interest rates. So it's a great time to put in an offer on a property if someone's thinking about it. Just hold off locking that rate would probably be a good option for most people, and then go ahead and lock it in. You can still make the offer now and close, towards the end of the month or even in October, but wait to lock in that rate till after that Fed meeting happens, because we do think that that will result in lower interest rates.
Okay, and so right now, where are the interest rates? What's the average?
So for an average purchase, we're running between 6 and 6.5. That depends on, of course, the loan program, the amount of the down payment, that kind of thing. We were just at 6.3. We might see 6.125 for some programs. For FHA programs, those can be in like the high fives. So it all depends on the loan program, and of course someone's credit score and also their down payment. But we're still running in that high fives to mid sixes right now.
So as of right now, someone that is wanting to buy with little as possible down, that would be an FHA loan. What would you, as far as your bank, what are you all offering? What is the interest rate? And then can you tell us what's required for that FHA loan?
Certainly, yep. So rates change on a daily basis, sometimes multiple times during a day. So the best thing to do is to go ahead and let's get a fresh quote for that person on the day that they're looking. It's still gonna be in that, 5 to 6 range, but it's gonna depend on that specific day. It's always good to get fresh information. For someone doing that FHA for this specific property where we're sitting today,
Yes.
it's eligible for one of our community credits, so we can actually offer additional credits towards the closing costs for that buyer, helping cover those costs. So in addition to a down payment, when someone buys a home, they have closing costs they have to cover. And so sometimes we can roll that into the loan for them, we can get a lender credit for them, or you can help negotiate a seller credit for them. So we can use all of those options to help cover the additional cash needed to pay for the closing costs, whatever's negotiated with the seller, and help get them even closer to zero. So in addition to having 0% down, we can also help cover some of those closing costs and reduce the amount that they need to spend to make that purchase.
So would that be a 3.5, or are you saying there's a lower?
So for some properties, there are even lower down payments. It depends on the eligibility of the borrower. We have to review their specifics.
Okay.
But if we can, we would do a 0% down, or we can do that 3.5 FHA down.
Okay.
Or we can do, a range of different programs. Sometimes there's down payment assistance programs that are a great fit. It all depends on the specifics of that buyer. So the best thing to do is to get connected with a good lender.
Okay.
You can reach out to me,
Yes.
you can reach out to someone else, but getting started with an actual personalized review
Okay.
to see what's gonna be the best program for them, to help leverage their buying power, to help minimize their cash out of pocket,
Yes.
but to make it the most affordable purchase that they can, so that they can do other, priorities with their cash.
Okay, well, and I thank you. So we're here at 4006 Sojourner in Austin Colony. This property, it's 1891 square feet. The asking price is $340,000. This home is an estate and will need some kind of repairs. Won't require a full repair, or rehab, but it will require some updates as far as, there's some minor stuff that needs to be done. And so I think you were also telling me that there was a program that would also assist with some of that. So can you tell me more about that?
Yes, that's a great one. It's actually one that I used even for my own home purchase.
Okay.
So you can roll in renovations to your purchase price, have one monthly payment, and be able to complete repairs on the home with the same purchase loan. So for that, it's a great great opportunity to, this kind of property where, a lot of it's already ready to go for you, but there's things you wanna do to freshen up the property
Yes.
and make it your home.
Mm.
So, what a buyer would do is actually put together that budget, put together that plan, select a contractor to take care of that project for them. We review all of that, but we don't just review the current purchase price and the current value, we look at the completed value after all that work has
Oh.
been added. And then they can actually borrow up to 95% of that
Wow.
completed value. So it's an even and more, powerful option for
Yes.
people, that they're not just borrowing on what it's currently worth, but borrowing on what it would be worth if
Wow.
that work is done.
Okay. What would be their credit requirements for that?
So that is, I think, a 680 for that program.
Okay.
And then there are some other options that we can review that even accept lower credit. So
Okay.
that's just one of the programs.
Okay.
There are actually several that allow renovation budgets to be wrapped in with the purchase. So if credit score is an issue, we can always, look for someone and see if there's ways of getting that credit score higher.
Mhm.
Or we can look and see, are there other programs that they would fit into and still be able to have access to that option.
Okay. So another thing, I know this property is USDA eligible.
Mhm.
So can you talk about the USDA?
Yes, yeah, so that's the 0% down that I
Okay.
was referencing, that's a great program for being able to limit that down payment cost. It has, a great interest rate in comparison to what's out there. There are obviously, pros and cons of every program, so
Right.
again, we wanna look at, is this actually what's gonna save the buyer the most
Right.
money? Lowest program fees, lowest closing costs, we wanna get them the best deal for their specific situation.
Okay, awesome. All right. So anything else that you'd like to share as for that, maybe that I didn't ask, or when the interest rates, you believe they're gonna go down, what is it, the 18th of this month?
Right, so the Fed is gonna have a meeting on the 18th of this month.
Okay,
The Fed rate doesn't control the mortgage rate.
Right.
They operate
Yes.
separately, as I'm sure you know. But what happens is investors react to that news.
Mhm.
They react to the meeting, the words that are used, the phrases that are used, the indications of the economic, plan.
Right.
And then based on that, the mortgage rates move according to the investor demand in the bonds.
okay.
So because there's investors putting money into bonds or shying away from putting more money in, that's what moves the mortgage
That's what it
rates.
is.
And then with the mortgage rates reacting well to the news, we do expect that there would be a better interest rate, a decrease in the rates
Okay.
based on that meeting. Because all indications, all hinting towards it, even the last meeting that happened, or one of the last announcements was that we would see that happen. So we are expecting it. We don't know by how much, we don't know, if it'll be a big bump or a small one, but a downward trend is overall better for buyers to be able to get a lower interest rate. But one of the important things is that if they're working with a lender that doesn't have prepayment penalties, they can go ahead and get that property now and then refinance
Right.
afterwards. So what you're doing is you're getting the purchase at a discounted price
Right,
and not having the risk of a bunch of buyers flooding into the market like we've seen in other years.
right.
And then driving those prices higher. Because there is a risk of, as rates come lower, all those buyers have been waiting in the wings and excited to buy, but a little bit fearful,
Yes.
well, the rates are too high, or for some people prohibitively high, and they just can't make the numbers work. They're gonna be flooding into the market, ready to make those offers, and that's when the pricing for sellers gets better, because now there's less inventory, there's more excitement about the properties that are available,
Okay.
and prices go back up.
Okay.
So I would say if I were looking to buy right now, I would wanna go ahead and get those offers in on a property, if there is one that's of interest, or in an area you wanna live in, or, a project you're willing to take on as an investor. Now's a good time to make those offers before those rates come down lower, and before there's more buyers wanting those same properties that you want.
Absolutely, okay. No, that makes sense. And so as for someone who is on the fence or
Mhm.
ready to buy, what are some things that they need to have ready to submit an application that you as a lender is gonna require?
Yes.
All lenders,
Great
basically.
question, yes, yeah, it's very standard amongst lenders. There's different levels of review, but what you really wanna go ahead and do is do a pre-approval review so that you can be ready to make an offer on a property. So that's gonna be turning in a pretty quick application, it takes about 7 minutes to answer. Page through those answers about your income and your employment or retirement or whatever it may be. And then there's gonna be some documents to upload. For most people who are W-2 employees, that's gonna be 30 days of pay stubs, their last 2 W-2s, and 2 months of bank statements. That's it.
Okay,
really painless.
Okay.
And if they can't find their pay stubs, they can still submit the application
Okay.
and then find the pay stubs later,
Right,
you know?
okay.
So, but what that allows us to do is it allows us to, like I said, customize that review for that person, figure out what's gonna be the best program for them, leverage their goals of what cash they have available, if they're receiving gift funds from a family member, if, you know, they're saving up, whatever it might be, crafting that plan for them for
Yes.
their specific situation. So it allows me to take a view on what they're actually working with
Okay.
and be able to let them know their purchase price range, let them know their different down payment options, compare their different purchase program options, and help situate them with something that's gonna work the best for them.
So when you receive their application and you look at it, you will actually try to work with them to find out exactly what it is that they're trying to achieve.
Yep.
And then you're gonna try to get them the best loan that you could get them as far as what they're trying to accomplish.
Exactly.
Because again, like you said, there's so many different loans.
Yep.
They could be, and as far as money down, so depending on the type of loan, depending on what they're trying to do, you'll help them with that.
Exactly.
Not just one
Exactly.
loan, one way.
Correct.
Okay,
Correct.
okay.
We wanna find out what's the best way to leverage their purchasing power,
Okay.
and also what's gonna get them the best method towards their goal. Cause
Yes.
every buyer's goal is just a little bit different.
Right,
Some are similar to others, some of them are shared, but
yes.
very often there are situations where there's a specific need,
Mhm.
and so we wanna figure out what's gonna be, you know, the program that delivers that for them.
Okay, so now we have the program already mapped out, they've already done the pre-qualifying, they found the home, they're on the contract, now what happens?
Great question, yes, so from when you submit your offer to your closing day is usually about 30 days. You can
Okay.
speed it up, you can do it a little faster, it's usually a 30-day process.
Okay,
We have those documents they already gave for pre-approval, so we'll submit that file to our in-house underwriting team. They're gonna review everything on the side of the buyer, make sure that all those calculations I did are correct, that the income's there, that
Yes.
the, you know, the documents look good. We verify the employment's still current, they haven't quit their job and gone on long-term vacation. And so just verifying all of that, we'll also request the appraisal on the property. So that's gonna be a third-party review, establishing opinion of the value,
mhm,
that it's sufficient for us to give our loan amount on
Okay.
that property. If it's a renovation project, we're also going to review that contractor, review the plans, incorporate that into the appraisal review. But if it's just a straight up purchase, then we're not doing that step, we'll
Okay.
just be doing the appraisal. And then we're also going to gather any other documents that came up in the questions of, you know, okay, we see you actually transferred $12,000 from this
Right.
account to this account.
Yes.
Where'd that money come from?
right, you have to
We
source
have to,
it.
yes, we have to make sure all those details are being followed up on, so sometimes we need some more bank statements or something. We like to streamline as much as we can, but there's guidelines we have to follow.
Right,
So then we'll have our conditional approval, we'll just be waiting for that appraisal to come in. The buyer will shop for their own insurance
Okay.
coverage on the home and select that coverage, that's something they do before closing. Then we're working with the title company, and any final, you know, changes to those numbers, any final items to incorporate, coming up with those final numbers, the finalized insurance policy and things like that. They're gonna pull a tax certification and make all their calculations of how much the seller owes the buyer for their portion of
Right.
the taxes for the year, and
that will be
to the
prorated,
penny,
right?
yeah, to
Yes.
the penny. So all these
Oh.
calculations are happening in the background, leading up to closing day. We then get that final loan approval when that appraisal's done, saying that the buyer and the home are both approved for the
Okay.
loan. And then from that moment, we can check and see, does anyone wanna move up the closing date? Are we
Right.
happy with the day we have? Okay,
Okay.
let's stick with it, or let's move it earlier. And then, the buyer's gonna go ahead and send their funds over to the title company. We send our funds over to the title company. And then we're now doing a hybrid closing for our closings. And what
Okay.
that means is that the buyers can actually sign almost all of their documents as e-signatures.
Okay,
There's still a couple documents that have to be signed in person with a wet
Right.
signature, which means just pen and ink.
mhm,
So sitting down with that notary agent or escrow officer at the title company, we still, for the county's sake, need some of those to be physical signatures.
okay,
But everything else, they can sign ahead of time on
Okay.
their closing day. So most buyers will sit down, sign through those documents, and then they'll go in and do about 10 minutes of actual signatures,
oh,
and then walk out of there with their keys, because we do table funding, which
Okay.
means that rather than holding everybody hostage and making them wait while we review everything, we've given permission to the title company that once those signatures are collected, because they're agreeing to help us get any pending signatures,
Yes.
we can go ahead and fund at that
Oh,
moment.
good.
So we're all good to go as soon as those signatures are complete. Obviously, our cash has been sent, the buyer's cash has been sent, it's transferred to the seller, and the title company registers that as an actual completed purchase, and the buyer gets their home.
Awesome, awesome. Okay, so hearing you, of course, talk about the different steps. Now, again, as a lender, because I'm sure you have had something to happen where unexpected or the buyer didn't know, what are things that you will tell them after you have, gone under contract and we're ready to go and we're waiting this process for the appraisal and the other things?
Yep,
What are some things they do not need to do
great question.
that will kill the
Yes,
deal and
yes.
the loan?
I've even had it happen, yes. We were able to fix it, but there are things that make it harder. So, a lot of people will say, do not open a new credit card, do not shop for furniture, do not buy a car, and do not quit your job. The do not quit your job one's important. You need
Yes,
to
it
show
is.
that income continuing. That was one of the ones that happened, but we were able to make the income work with the couple anyway. But, don't quit your job before you buy the house. As far as opening new credit lines or buying furniture or buying the new car, it's true that you don't want to, for most people, you don't want to change your debts that you have, the
Right.
liabilities, the monthly payments. Because what we've done is we've calculated
Based on
what
Yes.
you have, and we've set up the loan according to what's there.
that. Right.
So what you can do though, if you're working with a lender, especially someone who will take your phone calls and take your questions, is ask them, hey, I'm thinking about X, Y, or Z.
Okay.
Does that fit in my numbers?
Okay.
Because I've had a lot of families that they're going through multiple transitions or helping out a kid in college or
Yes.
co-signing for their mom or whatever it may be.
Okay.
They maybe can't wait those 30 days
Right.
to do whatever it is, but we just need the heads up that we can take a look, run those numbers, make sure it fits,
Okay.
help guide them in any way if we need
Absolutely.
to. So it's not an absolute no, don't do it, but it's a talk to your lender first
Yes.
about it.
Okay.
Don't go buy the car without us running the numbers. You can still maybe buy the car, but let's see how it affects the house, because you want to get the purchase on the house done,
Right.
and then, figure everything out from there. So,
Absolutely.
like I said, it's not a no, don't do it, except for the don't quit your job. It's just chat with the lender first, so that we can run those numbers and see if it works.
Absolutely. Okay. All right. So what is your strategy for locking in rates?
Awesome, yes. So there are a range of scenarios in market conditions that can lead to these moments of, should we lock right now this moment, or should we wait 3 days, or do we wait 3 weeks? You will never fully know. People at my company love to joke over the fact of if we had a magic 8-ball or a crystal globe, we would all be retired, because you could do a lot more with that ability if you knew exactly the right time to lock a rate. What we do know is market trends. We do know things like Fed meetings on September 18th. We know that that's happening. We know what we kind of expect. We know what world economists say about what's happening overall. But a buyer shouldn't wait to buy just because they want to pick the perfect moment to lock in their interest rate, or wait to go under contract just because they think rates will get a little bit better if they wait 2 more months. You're missing out on a great property at a great price if you do that. So, for my buyers, I explain the risk of waiting to lock, that there's always the potential that world events will drive rates higher, and it could happen suddenly. But if I think we're in an environment where it makes more sense to wait, that you're more likely to have a significant decrease and a better interest rate, let's go ahead and do that risky side of floating it, waiting, taking a look, reassessing. It's possible that someone won't catch the exact moment on the movement of a rate, but I'm watching it every day for them. I'm watching it throughout the day for them. And what I'll usually do is agree with them, hey, if I see X interest rate suddenly available at no cost, do you want me to lock that one for you? And they give me the permission ahead of time saying, yes, do that. So that if we're in a situation where rates are changing throughout the day and we have that, that moment, we can capture it, I can do that for them without interrupting their workday, without interrupting them picking up their kids, without waiting for, a 3-hour callback, and in that amount of time, the rate's gone. Because sometimes rates do move that fast. So I like to talk through the different options, talk through their comfort level with it. Right now, because over the next couple of years, we expect we'll see rates even lower. I think buyers can be a little less anxious about it because they're going to get the chance to refinance to a lower rate anyway. Now granted, we still want them, I treat it
Right.
as if it was mine, I wanna
Yes.
get them the lowest interest rate I
Yes.
possibly can. You want every bit of savings in the meantime. But because you are also planning to refi, it's not the kind of thing where you're waiting for the best possible rate ever, and that's your one chance. There's gonna be more chances to get better rates. So we're gonna try to do the absolute best we can with floating, waiting, watching, and then, bottom line, they have to lock in their rate about a week before closing. It's about the longest they can wait to do it, so that we can have our attorneys draw up their documents, finalize all those numbers with the title company. There has to be an interest rate to do all those calculations with. So we have to, go ahead and lock it at some point before
Okay.
their closing day. You're not gonna keep asking the seller to extend the closing date just because you wanna get a different
Yes.
rate, So at some point, we have to just go ahead and close it out and decide we're done. But we're gonna try to capture the best moment within that time period, from when they go under contract to when they're actually closing.
Okay, great. So talk to me about rate buy down.
Awesome, yeah, so rate buy downs can be a good option, especially if there's a higher payment sensitivity and a need for an exact monthly payment amount. That can be a good option. What we're looking at right now, though, is in an environment where we're gonna have rate improvements over the next, let's say, year.
Okay.
You don't wanna pay a giant amount of money right now to get a rate that you wouldn't have had to pay for if you wait 8 months for it.
Okay,
So for most people, it's a better idea to buy the house now, not buy down the rate, and then go ahead and refi later.
oh, wow.
With the exception of if they're like working with a builder or working with a seller who will pay a large buy down for them,
Mm-hmm,
that can make sense.
Okay.
I would still use that cash from them to cover all my closing costs.
oh, okay,
And then anything additional could buy down the rate. You wanna use every little bit of any coupon anybody's giving you ever.
okay.
'Cause
And I
it's
guess
free
if
money.
it makes a difference
But-
between you even qualifying,
Right.
then you
So
would
that,
definitely take advantage of that.
exactly, that can be a time when we go ahead and do that as a permanent buy down.
Okay,
But another option right now is actually a temporary buy down.
okay,
And what that means is that, it's going to bring your rate down for 1 year, 2 year, 3 years in an initial period of the loan, but it doesn't last for the life of the loan, as compared with the permanent buy down. So a permanent buy down makes it affordable for someone who couldn't, qualify otherwise, but a temporary buy down, you still have to qualify at the full rate, but you get to enjoy the lower rate in the meantime.
okay.
And that can be great, because it's actually something we can price in as the lender and pay for them.
Oh,
It's something a seller can choose to pay for them. And it's something where if you end up refinancing before, before that period is over, so let's say you've got a 2-year buy down, where
Mhm.
you were gonna get 2 years of savings on the rate, but you decide to refi in a year,
Mhm.
you would get any unused portion
Oh.
of that temporary buy down to bring down the balance on your principal.
Wow,
So it doesn't go to waste, like a permanent buy down is kind of a waste if you refi before,
Oh.
before you end up using the 30-year term on it.
yes,
But a temporary buy down, you can credit it back to the
oh,
loan amount. So
wow,
that could be good.
that's great, okay.
Yeah.
Wow, okay, I didn't know that. So right now, you don't encourage anyone to buy down their rate, knowing that we may have a potential,
Great question. So there are still situations where it makes sense for somebody.
okay.
But
so
I
it makes
don't
sense.
default to thinking that everybody should do it. Because what I want is them to actually capture the savings that they need for the situation.
Okay,
I would not pay a large amount of a buy down out of pocket as a buyer, knowing that I'm about to likely refinance to that same rate for free in
what's
8 months.
common or typical when people do buy down the rates? Like, is it a half a point, a point? And what would that
It
cost?
all depends. So the pricing on different rates depends on the day of the market.
Okay,
So you're gonna get a larger amount of a decrease in your interest rate based on different market conditions. So that, as much as it sounds like a non-answer, it all depends on what loan program are they doing,
okay,
what their credit score,
Okay.
there's all kinds of factors.
Okay.
How much are we trying to get there? Temporary buy downs are much more standard.
Okay.
In that there's a certain amount that's needed to move the rate down by 1%. I would say most people are doing one buy downs or 2 buy downs. So what that means is buying it down for the first full year or for the first 2 years. And we see more of those larger buy downs with builders
Okay.
funding those buy downs.
okay,
So, because it's a large amount of cash up front, if it's a buyer who doesn't have that kind of funding,
right,
they're not paying, $14,000 to buy
Right.
their own rate down, but a builder may do that for them. Or sometimes even a seller will price that into a
Okay.
home for them. But we see less buyers spend more of that upfront cost right now, again, because they're expecting that rate will come back around without having to pay more for it.
Okay, all right, thank you. So the next question, let's talk about, so some people that are not buying, refinancing, of course, with the interest rates fluctuating, do you see opportunities for buyers to refinance in the near future if the rates drop?
Yes, great question. So we offer the ability to refinance with no waiting period and no prepayment penalty.
Oh, okay.
So what that means is, yes, the lender technically just lost money because you just paid off the loan you just got, but we want that to happen for our
Okay.
customers. If you have access to a lower interest rate in 6 months, let's do it. If it's in 4 months, let's do it. If it's in 9 months, let's do it. But what we want is, there's always gonna be title fees that have to be paid
Right.
for. So we wanna factor those in, because
Mhm.
Texas requires extending your title policy. And then lenders, of course, there'll be lender fees, appraisal fees,
Right.
that kind of thing. Some of them can be covered, some of them can be credited with your rate pricing, some of them, there's ways of like factoring all those things in. But what we want is actual savings for that client. So you don't wanna actually just refi every single month or
Right.
every 3 months.
Now, is there a
You
minimum?
wanna-
I mean,
No, there's no
no?
minimum, but what you want is, you wanna actually be capturing enough savings.
Yes.
You want the rate to have improved enough that you're actually pocketing
money
those
to work.
savings in comparison with the closing costs.
Yes.
So what I'm gonna do is actually calculate a break even for someone and
Okay.
say, okay, let's say it costs you $2,000 to do this refinance, just picking a number.
Okay,
At what point, by the amount of your monthly savings, are you actually pocketing that, and actually starting to use that savings versus just paying yourself back the closing costs you paid?
Mhm.
So when do we fully cover all the costs with that monthly savings and start earning that amount? Because I want them to quickly be actually pocketing those savings
Yes.
instead of just paying the fees for a refinance
Right.
every single year.
right,
So I would say we might see people refinance in 6 months, who then refinance again 9 months later.
okay,
Typically, in most market cycles, it's several years between refinancing.
okay.
There's people who have very low interest rates, they won't be touching their rate.
That's true.
And that's a good thing for them too. So, people who bought in the last 18 months, they should reach out to a lender right now, they can
Oh,
chat with me, we can
okay.
run through numbers, see where they currently are, see a target rate, when it makes sense to do that refi.
Okay.
And we'll know to be able to watch for them and alert them of, hey, it's here, it's right now, let's get you
Awesome.
refinanced. So that's a great way to basically reach out for help in advance, almost like getting pre-approved in advance and
Yes,
going under
yes.
contract. You wanna also,
Okay.
for refinance, say, hey, I have a rate that's above 6%,
Mhm.
when's the right time to refi? So anyone who's 6% and above, they should be thinking about refinancing now.
Okay.
Even though it's not time yet,
Right.
the
It needs
people
to be
who are above
thinking.
8, they should be refinancing now. People who
Right.
are at 7, it's almost time to refinance. People who are at 6, we could keep watch for that.
Okay.
So, anywhere in that range,
Now, I
6 to
know
8%.
a lot of times investors sometimes pay a higher interest rate because
Mhm.
again, it's investing.
Yep.
Would you say the same thing for them? Because there may be some investors listening.
Great question, absolutely. So even investment properties, which you're right, the pricing for interest rates are higher for investment properties than they are for primary residence occupancy. For investors, there's still an improvement to the interest rate that versus what they had 16 months ago.
Okay,
So depending on what their scenario was, they very likely have access to a lower rate now than what they did when they purchased.
Okay.
So they should absolutely reach out, take a look, see what's available, because if it's not quite yet, it's soon.
okay, absolutely. Okay, well, again, I think, I don't have any other questions. Did you have anything last that you want to share?
I think that's great. Yeah,
Awesome.
it's a pleasure to be here with you.
Thank you so much. I
Thank you.
appreciate it. All right, so again, we have Jenny Lind with First United Bank, I'm sorry. And you have an email or a phone number, anything you'd like for me to share?
Sure,
Okay.
it's just JLIND@firstunitedbank.com, and I can be reached at 650-269-5680.
All right, thank you so much, Jenny. It's a
Thank you.
pleasure.